Good morning. You guys hear me? Hey, Jerry, thanks. Well, we had the IMF come out this morning and say, actually, I think Lagarde might still be speaking, basically saying the Fed shouldn't raise rates for till next year. So it really got the market boosted up, and now we're selling off. It sounds kind of desperate to me. Let's take a look at the daily. This is pretty, basically saying no Fed rate hikes, pretty much more stimulus, and the market's not really rallying on it. I mean, it did, but now it's selling back off, so we'll have to watch it. Go back to the 5 minute. Got extended on the 15 minute. Now we're going to come back in the 5 minute. We'll see if we can hold. Oil's getting beat up today. It looks like it's going back down to that bottom band. Pretty overdone on the 1 hour and 15 minute and 5 minute. We go to that bond chart we were talking about. This is with the IMF statement, so we've got this bond rally right now. But you could see it actually, I think it printed, yeah, 124, got below 125. And now it's trading 126, so gotta watch that. Let's see where this is gonna hold. And we had the one system trade. I explained it on the got long here. There's the profit target's going to be pretty big. So if you see a trade come in and it's got a profit and stop far away, that's on purpose. S&P's way weaker today. You look at the comparison. S&P's equivalent down here. A lot of that is probably oil too. And go through the higher time frames. Four-hour. Wow. Except for this little slip up here, you've pretty much been in that range for a month and a half. If I could get back down to maybe 40, 45.02, we'll go to the shorter time frame for longs. Let's see. I have the indices now so I can see where they're at. I always thought it was good to have, let me see if I can drag this over. You kind of always, that, like I always say, the anchor price. So when you see any of these printed, like the Dow is down 85 right now, 89, that is, that's from yesterday's close is what it is. So I always followed that. I never really looked at the actual price. So I'm just looking at the benchmark. How do the waves of selling come in? We got down 100, then we rallied. Now we're down 80. If this can hold in this area, you could see that that's a pretty good spot, but the market's down. So you got to be more cautious on the long side. Or it just gets beat down. There's no bid on it. Let's look at some targets. 1 hour 30 there. 57.80 be my next area. Yeah, let's see if it can hold. This is kind of no man's land for that, but we'll go to see if this. Got to make my. So here's Apple versus the Nasdaq. Although this is a 1 minute. Apple seems to be hanging in there, so no big push to that bottom goal band. Actually, Apple's been underperforming a little bit of late to the Nasdaq, so makes it even more important to watch it. Get rid of these. Pretty much range bound trade, so when you step further back. Got near the high end of the range. That was low end this morning. That IMF news caught me off guard, though. That was, you could see it on, it basically came out this candle. So you could see the market rally up, and there were sellers that came in and that really blasted off. See if the market can turn in here. Just to show how the stocks move. So here's the NASDAQ 100 ETF, 1 minute chart. Actually, might be 2 minute. Anyway, you could see it just moved from basically 10 cents to 50 cents. So that's $400 on 1,000 shares. You could see now too, the Dow's only down 55. So if we're going to get a breakout above this, it's going to have to work into this area. It's a pretty tough trade. A lot of overhead supply. So if you think about it, let's blow this out. A lot of people bought in here. Everybody who bought in here that still is long took overnight heat, just found out that pretty much the Fed isn't going to raise rates this year. So you got that rally. And these guys are still, everybody from here on up are underwater. They're in a losing position. So as it comes up, you could see the sellers come in. So those are people, the short-term traders are in here selling as the price comes into there. Once those sellers are exhausted, that's when you can get a bigger push to come to here, and then you'll have those people really desperate to get out, and then once they get out, then that's when you can push to another higher level. Kind of start stepping back though, and you can see it's the same story. More and more overhead supply just hanging out there. anybody bought that from here on up in this area. I mean, it's an hourly chart. Those are swing traders, basically. They're underwater. Crude seems to be bottoming here. Let's go to the tick range chart. Actually, it's not too thrilling. You made a bigger push lower, and it's just kind of flatlined on the oscillators. So if this were if this were going up, it was up here, then that'd be a good bullish divergence, but not yet. Just kind of sitting there. The S&P's definitely hanging in there compared to what oil's doing. I'd like to maybe go check bank stocks. I still haven't set up on my chart on my page, so this is the new stock trading page. So I've got to get that. I've got to get that set up better. If I want to mark it. So when I look at this, we're right at the midpoint. Let's go to the 15-minute. We're still above the band here. So probably looks like we can get down in this area. But we'll see if we can get down there. Just always got to be constantly looking for either an anomaly in the chart or a certain level or area that gives you, even down here, although this was middle of the night. But I guess the Chinese market was down over 10%, and then it came all the way back and was up a little bit. So it's kind of a wild ride. To me, that's typically the topping process of a bubble. So there's been charts that's been showing the Chinese stock index, and it's been, I don't know, it's up pretty insane numbers in the last year, last few months even. They actually mirrored, it put it over the NASDAQ composite from 1999, and it pretty much mirrored it. So what happened is after going into 2000, there was a huge correction right off the bat in January. and then the market comes screaming all the way back up, tested that, and then had another correction, and then had a new high in February, and then another correction, and just the volatility was starting to get crazy. So you knew the party was kind of over at that point, and that's what's exactly happening. And they're having 10% swings a day, so that's equivalent of 1,800 Dow points per day. So that's super crazy volatility. Seems like it's absorbed the selling waves, and maybe the S&P will catch up. Put this chart up. So this is the NASDAQ. NASDAQ 1 minute. So you could see the sell off here. Sell off, rally, rally. That was about 6 points, five, we'll just say 5 points. $5 is $100. So this move 50 cents. So 200 shares is the equivalent of a one lot. So we'll see. Could break out of this range. I don't know. It seems pretty heavy. It's kind of the same thing. Get that overhead. It's 1 hour, 30-minute, 15-minute. I've already got the 5-minute over here, so this is a pretty classic reversal off the bottom. So you could see on the 15-minute hit its area, started to bounce. Let's see where this is, 12:15. So 12:15 was around here. You could see on the shorter time frame, the bands were already starting to go up. You're getting buy signals. So those are definitely the more aggressive areas. Let me see, that's 13:30. So it was right on the open. It's kind of getting stuck in this tighter and tighter coil. I don't know if it's mean reversion software or just the style of more of these different, trading algorithms and firms and whatever, just kind of getting into the new norm of how the markets are. But it seems like there's coils all the time in the marketplace. And you usually should be able to trade a breakout of that coil. Wait, let me see. So a coil is higher lows, lower highs. Probably shows up more on the 1 minute. Lower highs, higher lows. Although this coil is probably just a touch more bearish. This is one place where you could see how the volume has been so much lower lately. Let me see what the volume. Let me expand this out. You can literally see this a 1 minute bar, and it's almost like there was no. I mean, the volume is just pitiful here. Here, here, here. Pretty much in the peak time for this market, so first couple hours should be the best. S&P is hanging near its lower end of the range, so that's, I don't know, I think we might test down here and then break down, maybe test this low. I'm going to keep the 1 minute up so you guys can see. There it goes. See how it moves tick for tick? This is the level 2. That's the bid to buy it. This is the offer to sell it. These are the actual prints. So you could see everybody's jockeying around for position on what, this is pretty much the ladder, the equivalent of the ladder. And everyone's jockeying around here. But there's no trades going off. This is the time in sales. 500-600 shares, really. So all these guys are jockeying for position. You can see this number's constantly changing, but okay, here comes the volume. Bigger sellers. $600. Decent down move there again, and there's nothing traded. I mean, I just wonder if that's the full, if it's just their book, or is it the whole NASDAQ market? Because that's pretty sad. People are trading 50. You'll see as if there's a bigger move that the activity picks up on that, but it's really no different than, here's a ladder. So I just put in an order to buy at 69. See if we get filled. Just need one little down tick. There we go. So fill at 69 cents. Although we're going down, I'm just trying to show and how that works. So basically it's the equivalent of 03. So I bought 100 shares. If you eventually within probably about 3 months, you're good for, well, not even 2 months, I guess. If you're looking at how it will work, you'd be trading 1,000 shares. So you're up $200 right there. Could take half off, break even, stop. See how it comes back. It always backs and fills. So that's why you like to take some off. No, bigger push lower. No trades though. Very little. Now I see why I got to have a stop in. So that's 40-cent move. I would put a then to close the position, you could just hit close. So basically that's about 5 points of heat. Here's Apple. Let's see if Apple stays strong. Hanging in there a little bit, but looks like it wants to make another push lower. Gotta see Apple turn. I know it's pretty small. I have to look how to expand that out. So this is where you'll see relative strength. Is this going to hold or not? There we go. Apple's going to bounce. So we printed a new low in the S&P, not in the NASDAQ. I can show you. Want to see really craziness? That's the level 2, the ladder, as you will, on Apple. What I typically do is I'd look at the bid just to get, just to focus on that price, just that. I don't need all this information. You could even go like this. So now it's been paying between 65 and 75. I'd like to see this break out above 75, but it seems pretty heavy. Yep, there it goes. Held at 65 though. So the time and sales here, if it's green, it's a buy. So they're buying the offer. So an old-fashioned tape watcher would say, okay, if they're trading, here's the offer 40, they're hitting the offer, they're hitting the offer. The offer just went up, no one's buying it. Okay, now they're hitting it, now it just went up 10 cents, someone bought it. But tiny size, now people are selling at 50 cents. So if there's going to be a bigger move, you would have seen much more volume. But Apple's doing it. Apple's pretty much the most active traded stock. You can see the time and sales goes crazy. 13 million shares traded so far. Now you see all those buys come in. See that? So all those guys were leaning on this price level. When it failed, it just literally pops up. Now they're selling into it. You see all the red? We're back to 03, which was our entry price on the TQ. Actually, we're up now. So if that's the bottom, so in that rally, I'd probably just hit close, exits the position. We'll get back in on a pullback. Kind of like Apple better. Way too much information there. Right. There you go. There's a 30-cent spurt. I'll go back to Apple. See how it was the test of this, and then the ignition was Apple, and then the NASDAQ took off after it. Especially since they took out that. It's really off to the races. So that move there is $900 on 1,000 shares. Let's go back to Apple again. Apple's just hanging out. So that's pretty much stock trading. You could see how it's almost exactly the same. There's not a whole lot of difference there. So all these different companies and or banks created all these derivative products that would mirror that, because some people in the mutual fund community can't buy, they can only buy stock, so they can't buy futures, they can't buy, so that's when all these different trading vehicles like the ETFs and the QQQs, and then they just went hog wild with it and start making every possible ETF. Now, a lot of these are, these ETFs are very super thin. I've looked at, there's like basic materials and stuff like that. I mean, some of these ETFs, there's just zero volume on it. So it's something, if you're in a long-term trade or you're interested in like a position trade, that would kind of be the thing that you're looking to do. But for day trading, you got to go with the more liquid ones. This is the triple long. So there's the regular 1-to-1. So that's for bigger dollars, hedge funds, etc. Want to trade that. So if the Nasdaq's up 1%, this will be up 1%. If you get the Nasdaq's up 1%, the TQQQ will be up 3%. So you can see how the knife works both ways on that, winning and losing. So that's why you got to be, if you're trading the more aggressive ETFs, you got to basically trade it like it's like we're doing with the Nasdaq futures. You got to be on it. No messing around. Definitely no messing around with that. All right, we're getting back down in that area. You see my originally bought at 69, right back to the same price. Boy, they make this stuff tiny. I mean, look at that. That's your price. I gotta minimize this. It drives me crazy. Each different color is a different, there's that CHSX from yesterday. That guy's a market maker for sure. He's always in the best bidder offer. he's both sides. So if someone sells it and buys it, they because they're market makers, they're able to trade both sides, so they actually make guaranteed money on that. If you're sitting on the bid and offer, because if someone buys it, you're selling it to, and if someone sells it, you're buying it to them. So it's like you get free money. But they're at risk if all of a sudden they get hit with a huge swamping order like we saw. Then they're in trouble. You'll see on futures, you don't do this as much, but you start to see that on especially on stock. Let me do Apple again. They kind of lean on levels. Like this didn't really come in as much as the Nasdaq did, so that's kind of bullish. But you can lean on levels with the tight stop and get out. I mean, I used to do all the time a type of trade where if you got a double bottom here, you just buy it on that first breakout. 68 cents, your stop would be 64. So literally risk 4 cents and then watch it run 40. That's where you get into really nuanced trade. But to me, that's like, you take that trade all day. Risk $40 to make 400. Actually, 70. Yeah. Guess I should have left that. I think I would have got filled. It did get down there. I should have just bid it at 69. Had a low of 61. That's the thing. If you pick levels in stocks, it's a little bit different than on futures. Pretty much trying to turn the ship around here. Back in, I believe it was probably about 12 years ago, prior to pennies, they were doing, well, it's probably 15 years now. They did it in eighths. So when you saw basically the similar as a tick, so when you got in, it was if it down ticked, you got filled, and then it up ticked, you made 120. Basically, after commissions, about 100 and something dollars, 110. But then you could see how the market moves when it starts to get going. It would go click click click. You know, now you're trading three. If you bought evens, it's trading 3/8. You move 3 ticks, you're up $380. You could sit around and wait all day for a trade, hit it. Some of the more faster moving stocks, you might do 500 shares, but if you caught it on a turn, it would literally, the next price would be 50 cents, so you're up 250. if you got a bigger push then like this, you'd be up $1, so you're up $500 in 2 minutes. You're done for the day. And that's more akin to the scalping that I've talked about too. I mean, I guess you could technically look at that same way here. You know, we got long, what, 03, now it's 08, 09. Back in this area. There's the 1 minute, the double bottom. The double bottom. The rally, pull back, and then the rally, it just took out the high here. It may have extended a little more because remember, this is a triple ETF, so. Let's see if you could short it. Maybe I could short it at 10. Sell. I guess you can, that's good. So I have entered a sell, and it just got filled at 115.10. See if it comes in. I'll buy it at even. Filled. So it just made 10 cents in 45 seconds. Really, the way I look at it, your goal would be make a buck a day. That's what I used to do. Buck a day keeps the doctor away. You do 1,000 shares, it's $1,000 a day. I mean, it's take you time to get there. Even if you're trading 200-300 shares, it's $200-300 a day. It's kind of what we've always preached. So do it the right way, chip away. And then with the systems trades, there's well, I have market making systems for stock, kind of like what I just did. We would get in and it would automatically, because it took me a couple seconds to put that order in. Although that's the first time I put an order in on this system, but it's the computer does it. It's super fast, so that sold off a little more. So that's the thing, you can easily buy or sell. I was short. I mean, I just got out for 10 cents. It just went 20 cents lower. So you can definitely do that. It's basically akin to what we were talking about on, 10 cents is probably 2 ticks on this. I will take that crazy noise off the screen. You get used to it, would you say? Or no? Anyone? Mary, was it driving you crazy? I think you could actually play around with their settings. You're cross-eyed. That's funny. I mean, you seriously could go. I'm gonna get my pending orders out of here. You could just go like that. Not so bad. So what you'll see is like it just traded 49s, now it's 67. I mean, if you would, let me see if it pushes lower again. But that's not too bad if you got it like that. You could just do, you can add the market buy and sell. There it goes. All right, we'll see you in the wrap-up call. Thanks a lot.